hello class, welcome to another discussion for accounting for business combination. So in this particular video, I shall be presenting some sample problems in relation to merger acquisition or a purchase of net assets. Okay, so to start, we have here our first problem. Now we're in Agdao Corporation paid 6 million to purchase NCR Corporation on January 2, 2013, and NCR was dissolved. So the purchase price consisted of 100,000 shares of Agdao's common stock with a market value of 4 million plus 2 million in cash. So in addition, Agdao paid 100,000 for registering and issuing the 100,000 shares and 200,000 for other costs in consummating the combination. So the statement of official possession for the companies immediately before the combination is summarized now as follows. So we have here the stated official possession of Agdao and then at NCR. Also, yung fair value ng assets and liabilities of Agdao and NCR. Okay, so the requirement is to prepare journal entries to record Agdao's acquisition of NCR if it is a purchase of assets and liabilities or yung purchase of net assets. And also to prepare statement of official possession of Agdao January 2, 2013, immediately after the combination. Okay, so but before that, i-compute muna natin yung goodwill, no? So if the acquisition resulted to a goodwill or a bargain, no? Okay, so yung acquirer natin is si Agdao, no? Then yung acquiring natin is si NCR. That's why si Agdao yung legal entity or yung surviving company, and then si NCR yung ma-dissolve, no, na entity or na company. Okay, so to compute for goodwill, that's consideration transferred less the fair value of your net assets. Okay, so and diba as all the consideration transferred and the fair value of the net assets acquired and liabilities assumed or acquired shall be measured at fair value. So yung consideration natin, yung common stock is 4 million, yung fair value, common stock is at fair value is 4 million, then yung cash natin, we have 2 million. So we have total consideration transferred of 6 million. And then, yung total assets natin at fair value, that's 7.2 million. And then total liabilities, that's 600,000 and 1.2 million for accounts payable and mortgage payable. That totaled 1.8 million. So, the net assets, yung 7.2 na assets and 1.8 na liabilities at fair value. Yung net assets natin or yung assets less liabilities, that's net assets, is 5.4 million. So, the goodwill is 6 million less the fair value of your net assets. We have a goodwill of 600,000. Okay? So, to record the acquisition, Agdao Corporation shall debit all the assets of NCR at fair value. So, you have cash of 480,000, AR of 720,000, notes receivable of 600,000, inventories of 1 million, land at other current assets at 400,000, also land at 400,000, buildings at 2.4 million, and then equipment at 1.2 million. And then since the acquisition resulted to a goodwill, so i-debit natin yung goodwill at 600,000. Okay? So again, that's i-debit niya ang total assets acquired, and then at fair value, and then yung goodwill, no? And then Agdao will credit all the liabilities acquired and then the consideration transferred. Okay, so yung accounts payable natin shall be credited at 600,000, and also the mortgage payable is at 1.2 million. Then since yung consideration natin is cash and shares, no, yung capital stock natin has a fair value, diba, of 4 million. but yung capital stock should always be credited at par. So, since it issued 100,000 shares and then yung par is 10 pesos, so capital stock shall be credited at 1 million. That's 100,000 pesos, 100,000 shares, then 10 per par. That's 1 million. Then, the excess of the fair value of the shares and then yung capital stock na na-credit natin is credited to additional paid-in capital, no? At 3 million since it's 4 million less 1 million. Okay? Then, of course, you'll credit cash at 2 million. Okay? Pero, yung itong cash, since nag-debit tayo ng cash, na-credit in cash, pwede rin siya in-net. No? Credit. That's net credit of 1,520,000. Okay? Then, to record the acquisition-related cost, so, we have 100,000 pesos na stock transaction cost, no? I-debit yan siya kay additional paid-in capital. Okay? And then, yung acquisition expense, no? Na 200,000, no? Yung cost na incur natin in consummating the combination or yung direct cost shall be debited to acquisition expense at 200,000, and of course, shall be crediting cash, no? For 300,000. Okay, so next requirement is to prepare a statement of financial possession of Agdao Corporation, no, immediately after the combination. Okay, so when you prepare financial statements, no, I mean to say, financial possession statement of financial possession of Agdao, at the date of acquisition or immediately after the acquisition, i-combine mo lang yung records ni Agdao at saka ni NCR. But you always take note that yung kay acquirer, which happens to be Agdao, and then acquiry natin, which is NCR, yung kay Agdao, yung acquirer is at book value, pero yung kay NCR is at fair value. So again, for acquirer, that's book value, and then ka-acquiry at fair value. But you also consider yung effect ng business combination or effect ng merger. Since these records, no, was prepared before the combination. So, i-take effect lang din natin yung you combine the two records at book value and at fair value. Consider natin yung effect ng business combination. Okay. To start, we have here cash. So, may cash na 6 million si Agdao. Then, at fair value, no, cash for 80 si NCR. Pero, i-deduct mo sa cash yung 2 million na part ng consideration. Kasi nga, di ba, Agdao paid 2 million to purchase NCR. And also, it incurred 300,000, no, na acquisition related cost. 100,000 for stock transaction cost, and then 200,000 as direct cost. So that's 6 million plus 480,000 minus 2 million less 300,000. We have 4,180,000. Okay. So yung AR natin, book value 2.6 and fair value of NCR 720. That's 3,320,000. Again, for notes receivable, that's 3 million for Agdao, and then 600,000 for NCR, that's 3.6 million. So, inventories natin, book value ni Agdao, that's 5 million, then fair value ni NCR na 1 million, that's 6 million in total. Then yung other current assets, that was 1.4 million for Agdao, and then 400,000 kay NCR at fair value, so you have 1.8 million. So yung total current assets natin, that was 18.9 million. Okay? And then for the non-current assets, okay, the non-current assets, so yung land natin, that's 4 million for Agdao, and then 400,000 for NCR, that's 4.4 million. So yung building natin, 18 million kay Agdao, and then 2.4 million kay NCR, that's 20,400,000 in total. Yung equipment natin, we have 20 million for Agdao, then 1.2 million for NCR, that's 21,200,000. Then of course, The goodwill, no, it will be presented as an asset. That's 600,000. So the total non-current assets is 46,600,000 plus the total current assets of 18.9 million. So you have your total assets of 65.5 million. Also, for liabilities and shareholders' equity, we have here accounts payable of 2.6 million. That's 2 million for Agdao and 600,000 for NCR. Yung mortgage payable na is 11.2 million. That's 10 million of Agdao and 1.2 million of NCR. Okay? Then yung shareholders' equity natin, so yung capital stock natin, additional paid-in capital and retained earnings. Okay? You take note that ang ma-forward lang na additional na shareholders equity accounts are yung kay acquirer, which happens to be Agdao. So i-ignore mo na yung anong kay NCR being the acquired. Okay? So yung capital stock natin, the balance was 20 million plus diba additional 1 million yung shares. That's 100,000 times 10 na share. That's 1 million. So you have total of 21 million after the acquisition. Yung additional paid-in capital natin, that was 16 million before acquisition. But di ba we've issued shares. So the fair value was 4 million. Then yung par is 1 million. So may excess diba na 3 million. And also, the 100,000 na stock transaction cost is diba i-debit yun siya kay additional paid-in capital. No? So, it will reduce the additional paid-in capital. So, the additional paid-in capital is 18.9 million. And then, so your retained earnings natin, that's 12 million before the acquisition. And then, since walang bargain, you are to deduct na lang the acquisition expense of 200,000. You have 11.8 million no, as your retained earnings. Then the sum of the stockholders' equity is 51.7 million. No? Then you add with the liabilities of 13.8 million. You have total liabilities and shareholders' equity of 65.5 million. Okay, so that's the first problem. No? Okay, so let's move through the second problem. Okay, so we have here the following balances. No? Or balance sheets were prepared for Avril Corporation and Blink Corporation January 1, 2019, just before they entered into a business combination. Okay, so take note of the account, the balance sheets of the two entities, no? Okay, so on that date, the fair value of Blink's inventories and building and equipment were 78,000 and 124,000. respectively, while bonds payable has a fair value of 42,000. Okay, so the fair values of all other assets and liabilities of Blink Incorporated, except for goodwill, were equal to their book values. So Avril acquired the net assets of Blink Company by issuing 2,500 shares of its 30 par value common stock. Okay, then yung fair value niya is 36 per share. And purchase price in cash amounting to 12,000. So contingent consideration that is determinable, probable, and reasonably estimated amounting to 2,000. So yun yung discounted value niya. So additional cash payment made by Avril Corporation in completing the acquisition were legal fees for contract of business combination, that's 8,000. Accounting and legal fees for stock registration, that's 11,000. Printing cost of stock certificates, that's 6,000. Finder's fee, 7,000. Indirect cost was 5,000. Okay, so yung requirement, no? So at the result of the business combination, we shall be determining if it's goodwill or gain on acquisition, total assets, total liabilities, retained earnings, and total stockholders equity. So before we'll compute the goodwill or a gain on acquisition, let's determine muna what are the consideration transferred. So, yung consideration transferred natin was yung common stock. That's 2.5, no? But we'll consider the fair value of the share. That's 2.5 times 36. That's 90,000. Okay? Then yung cash natin, that's 12,000. And then yung contingent consideration discounted was 2,000. So, yung total consideration natin, that's 104,000. Okay? But the fair value of our net assets, okay? So, we have here, pwede man din na i-consider mo, i-itemize mo yung assets, then i-consider mo yung fair value. But pwede din ganito, you determine total assets at book value, that's 200,000. Then, i-add or i-deduct mo lang if ever may undervalued. So, if assets undervalued, i-add mo sa assets. If assets is overvalued, i-deduct mo sa total assets. Okay, so we have here, yung inventory natin, the fair value was 78, but its book value is 50,000. So, undervalued siya ng 28,000. Then, yung equipment natin, you take note that it's 75,000 na book value, ba? Kasi 100,000 of your buildings and equipment and accumulated depreciation of 25, so may book value siya ng 75. But the fair value is 124, no? So yung 124 less 75,000, undervalued siya ng 49,000. And then, i-deduct mo yung goodwill. No? So since, kasi, i-consider lang natin is yung identifiable assets. So, i-deduct natin yung goodwill. No? Kasi pag may goodwill, yung acquiry, no, which happens to be Blink, di mo siya in-consider as part of the fair value of the net assets acquired. Okay, so, ang ginawa natin, kinuha natin yung total assets at book value, i-add natin yung undervaluation of the assets, and then deduct natin yung goodwill. So, total asset fair value is 227,000. Okay, so total liabilities at book value natin that is 100,000. Yung 100 is the sum of your accounts payable and bonds payable. Okay? Pero, may undervalued tayo na bonds payable, diba? Kasi, the bonds payable is 30 per record, but the fair value is 42,000. So, may 12,000 na liabilities at fair value. So, 12,000 na undervaluation of your liabilities, yung bonds payable. Okay, so yung total liabilities at fair value na to is 112,000. Okay, so the net assets, no, is 277,000. That's the total asset at fair value, and liabilities at fair value is 112,000. No, so you have 115,000 as your net assets. So, yung consideration transfer natin is 104,000, and then the net assets was 115,000. Okay, so you have gain on acquisition of 11,000. Okay, so yung gain acquisition shall be presented in retained earnings. Okay, retained earnings siya. Okay, so it's not a goodwill but rather a gain on acquisition. Okay, so to compute for the total assets, so it's other way din, no? So instead of adding individually all the assets of the acquirer and then acquiree, so pwede din ganito, i-determine mo lang yung total assets at book value ni acquirer, okay, which happens to be 785,000. Okay, so at book value yan siya, 725,000. Then total asset at fair value ni acquiree, which we have computed at 227,000. Okay, no? So total asset at book value ni acquirer, then total asset fair value ni acquiree. Then i-deduct na lang natin yung cash na consideration, which is 12,000, and all the acquisition related costs, that's 8,000, 11,000, 6,000, 7,000, and 5,000. I-deduct natin yung total acquisition related cost. Since wala lang goodwill kasi bargain, so it's 963,000 lang. But if may goodwill, i-add natin siya, no, in determining the total assets. Okay, so again, that's total asset at book value ni acquirer, total asset at fair value ni acquiree. Then i-deduct mo lang yung assets, no, na part sa consideration, which happens to be cash, and also the acquisition related cost, no. Kasi 'di ba, in this ano kasi records, di pa na consider yung business combination, no? So therefore yung cash, may deduction na 12,000 and then 37,000 na part of the acquisition related cost. So you have total assets of 963,000. And then to compute for the total liabilities, no, of course, i-combine mo lang yung liabilities ni acquirer at saka ni acquiry, which is April and Blink. So yung accounts payable natin, 125,000 for the acquirer, then 70,000 for the acquiry. That's 195,000. Also, i-consider natin sa part ng accounts payable yung contingent payable, no, that's 2,000. And then, 2,000 kasi part yan ng consideration, no? Yung 2,000 na contingent. Then, yung bonds payable natin, that's 200,000 for the acquirer, then 42,000 for the acquiry, no? That's 242,000. So, total na liabilities natin is 439,000. Okay? Then, for retained earnings, no? Sa retained earnings, i-consider din natin yung saan ma-charge yung acquisition related cost natin, no? So, saan ba ma-charge yung acquisition related cost? May it be sa additional paid in capital ba? So, if it is tax-related cost or yung direct cost or indirect cost na ma-expense. Okay? But since also at date of possession, yung lahat ng expenses natin, i-close mo din natin siya to retained earnings. No? So, retained earnings na lang din natin siya i-deduct. Okay, so isa-isahin natin yung cost. Classify natin if it's related to it to be deducted to retained earnings or yung sa additional paid in capital. Okay, so yung 8,000 na legal fees per contract or business combination, that's direct cost. So, i-absorb yun dyan ni RE. Okay, yung accounting and legal fees for stock registration, basta for stock registration, i-register kasi yung shares. So, that's a stock transaction cost. So, kay APIC siya i-deduct. So, of course, yung printing cost ng stock certificates kay APIC din, no, it should be in capital. Yung finder's fee and indirect cost kay retained earnings. Okay? So, but si additional paid in capital, di ba, i-absorb niya yung all stock transaction cost amounting to 17,000. Pero, yung excess lang kasi ng par, kasi di ba may 36 tayo na fair value, then 30 na par, then we issued to 5 shares. So, yung excess lang is 15. Then, 17 yung related to APIC, di ba, na cost. So, di ka na-absorb ni APIC yung expense, yung stock transaction cost. No? So, i-absorb yan siya ni RE. No? So, therefore, yung excess ng additional paid in capital, no, and then yung stock transaction cost na incur natin na 17,000, i-absorb siya additional kay retained earnings. Okay? So, therefore, yung 37,000 na acquisition-related cost, 22,000 relate yan siya to retained earnings and 15,000 related to additional paid in capital. Now, to compute for the total retained earnings, so yung retained earnings before acquisition ni acquirer, no? How much yung retained earnings niya? That's 200,000, okay? 200,000 yung retained earnings. Then, gain acquisition, that's 11,000, diba? Gain acquisition, 11,000. Okay, 11,000 yung gain acquisition. And then, what else? Yung acquisition-related cost na ma-charge kay retained earnings, that's 22,000. Okay? Again, that's retained earnings before acquisition of the acquirer plus gain on acquisition. So, pag may gain, addition sa retained earnings, And then, pag goodwill siya, addition sa total assets. Okay, then acquisition-related cost natin, that's 22,000. Yun lang yung i-absorb ni, retained earnings, 22,000. So, yung retained earnings end natin, we have 189,000. Okay? So, to compute for the total shareholders' equity, so yung common stock natin, we have 200,000 plus yung additional na 25 shares times 30 being the par. Kasi diba, it issued 25 shares at na 30 per par value, no? For the, as part of the purchase price. So, yung total niya, that's 285,000. So, yung additional paid-in capital natin, that's 50,000, no? 50,000 plus yung excess, no? That's 25 times 6. 6 kasi, 36 yung fair value, yung par is 30. Then, less 15,000 yung stock transaction cost. Pero, limited lang man din siya yung sa excess of the market value of the shares less the par, no? So, still 50,000 lang siya, no? 50,000 lang. Your retained earnings natin was 189,000, no? As computed kanina, so you have total share of 524,000. Okay? Also, para mas madali, then, to determine the total shareholders' equity, no, you have computed naman din your total assets. And then, i-deduct mo lang yung total liabilities na na-compute mo din, you have your total shareholders' equity. So, if it's 963 minus 439, you still have total share of 524. No? But you can also compute for the components of your total share. Yeah, that's capital stock, APIC, and retained earnings. Okay? That ends our second problem, no, in relation to merger. So, our last problem, no, is a, problem we're in, what if may two or more acquirees? Kasi of course, dapat isang acquirer lang. But in this case, two acquirees. So, pag may dalawang acquirees tayo, ang pag-compute ng goodwill at bargain is i-separate mo siya. Okay? I-separate mo. So, for example, ito, the following are the condensed in which possession of IZL and Vianney, January 1. So, you have here the total assets, liabilities, and then the equity of IZL and Vianney. And then, we have here, side the corporation acquired the net assets of both IZL and Vianney. So, since acquisition of net assets it is a merger by issuing 81,250 shares to IZL and then 22,550 shares of Vianney. Okay, so the par value of the share is 35, and then the market value is as of January 2019 is 40 per share. Okay, so you take note, ang basihan mo sa fair value is fair value ng issuing company, meaning to say fair value ni Asaido being the acquirer. So, you have also some costs incurred. You have indirect costs, finder's fees, accounting and legal fees for registration, and printing costs of stock certificates na na-incur. And then, sales retained earnings is a balance of 4.3 million January 2019, immediately before the business combination. So, as a result of the merger, compute for the following, we have the goodwill on the bargain and the retained earnings. Okay? So, as what I've said kanina, if there is two or more acquirees, individual mo i-compute yung goodwill and bargain. No? So, we have here consideration transfer, that's 81,250 shares kay IZL and then 22,550 shares kay Vianney, no? I-multiply mo lang siya sa fair value. That's 3,250,000 for IZL and then 900,000 for Vianney. Then, consideration transferred less fair value for net assets for Vianney. Pwede mo i-add yung common stock, additional paid-in capital, and retained earnings, or i-deduct mo lang yung total assets less liabilities. That's 2,190,000. Okay. And then yung kay Vianney, that's 1,223,000 and 320,000 yung liabilities niya. So therefore, it's 903,000 yung net assets. So therefore, ang result niya, for ICL, that's a goodwill of 260,000. But for Vianney, that's a bargain of 1,000. Okay? So, di siya pwede net 259,000 of goodwill. No, di siya pwede. So, dapat separate din siya. So, 260,000 as a goodwill and then bargain na 1,000. Okay, so, kasi if i-combine mo siya, no, pag-compute, it will result to 259,000 goodwill. No? But, the presentation mo talaga is 260,000 goodwill and 1,000 na bargain. Okay? Okay, so, since the next was retained earnings, we have to classify the cost. No? So, let's start with iShell. So, sa iShell, may APIC tayo na 81,250 times 5. So, bakit 5? Kasi 40 yung market value ng share, 35 yung par. So, may 5 na excess. So, yung additional paid-in capital in relation to issuing 81,250 shares ni Saido to acquire iShell. So, it resulted to 406,215 na additional paid-in capital. But, yung cost na na-incur ni iShell, no? Kay iShell ito, iShell, no? Okay. So, na-incur niya na cost is indirect, that's 37,500. Charge din siya to RE. Yung finder's fee na 26,500, charge din siya to RE. Yung accounting and legal fees for sa registration, i-charge din siya kay additional paid-in capital. Okay, so that's 137,500 and 187,500. So, since okay lang ito, no? So, total RE is 64,000, yung APIC is 187,500. Consider mo lang na since, okay, yung kay iShell, 406,250 yung excess, will be credited to additional paid-in capital, pero 187,500 lang yung stock transaction cost. So, okay, kaya pa i-absorb ni excess na APIC yung stock transaction cost kasi it's 406,250 and then 187,500. Okay, let's have kay Vianney, no? Kay Vianney, no? That's 22,550 na share times 5. That's 112,750. Okay? Na additional paid-in capital, no? Then, yung cost natin, diba? We have 40,500 indirect costs sa charge kay RE. Finder's fee of 14,000. Okay? That's still kay RE. Yung accounting and legal fees for registration, that's 145,000. And printing cost of stock certificates, that's 37,500. So you have 182,500 for charge to APIC and then 54,500 charge to retained earnings. Okay. So we have problem. It's because 182,500 yung stock transaction cost. Pero yung excess, diba natin is only 112,750. So, ma-over-absorb nyo siya. So, yung excess of the 182,500, no? So, excess na 182,500, 182,500 less 112,750, no? Ito is 182,500 less 112,750. So, you have 69,750, no? Na dapat ma-absorb ni retained earnings. So, yung total ma-absorb ni retained earnings, that 124,150. And then, yung kay, additional paid-in capital, maximum lang kasi yung 112,750, no? So, yung excess, dapat i-absorb na siya na retained earnings. So, ma-form purchase expense or deduction in retained earnings. Okay? So since we have determined, no, the goodwill or bargain, then how much will be charged to retained earnings, and how much will be charged to additional paid-in capital. So to compute for the retained earnings, we have here retained earnings before acquisition or of the acquirer. That's Sido, that's 4.3 million plus gain on acquisition, that's 1,000. Okay. Okay. Then yung acquisition related cost, the charge natin kay retained earnings, we have kay for iShell at 64,000, and for Biani we have 124,250. So the retained earnings end natin, or retained earnings after the acquisition, that's 4,112,750. Okay, so thank you for watching the discussion, and then we'll have more video stuff for accounting for business combination, particularly na din tayo doon sa stock acquisition. So, thank you.